Hello, and welcome back to Underdog Investing. Today I'd like to talk about NIO. Firstly, going through the Q4 2020 earnings report, which just came out yesterday. I'd like to go through the key points from that report. And then I'd like to talk a bit about the stock price and what I'm planning to do with the stock moving forward. Before I jump into this video, I'd be grateful if you can smash that like button and subscribe to the channel for future updates. So let's jump straight into it, starting with the deliveries. So NIO managed to deliver 17,353 vehicles in Q4 of 2020 alone. So that's significantly higher than the 12,206 vehicles they managed to deliver in Q3 of 2020, and more than double of the number of vehicles they managed to deliver in Q4 of 2019, just 1 year ago, where they managed to deliver 8,224 vehicles. And if we have a look at the year as a whole, in 2020, they delivered 43,728 vehicles in total, which is more than double of the 20,565 vehicles they delivered in 2019 in total. Moving on to the vehicle margin. So the actual vehicle margin also improved. So in Q4 of 2020, their vehicle margin was 17.2%. compared to negative 6% in Q4 of 2019, just 1 year ago, and also better than the 14.5% vehicle margin in Q3 of 2020. And if we have a look at the year as a whole, so in 2020, the vehicle margin was 12.7% as a whole, compared to the negative 9.9% vehicle margin for 2019. Now, the reason they gave, the increase of vehicle margin compared to the fourth quarter of 2019 and the third quarter of 2020 was jointly driven by the increase of delivery volume of the vehicles in Q4 of 2020, as well as the decrease in purchase price of certain production materials. So let's talk a bit about the financials now. In terms of revenues, you can see that in Q4 of 2020, we had a revenue of around $1 billion, which represents a 133% increase compared to Q4 of 2019, and a 46.7% increase compared to Q3 of 2020. And if we have a look at the total year, so in 2020, we had a revenue of around $2.5 billion, which is 107.8% compared to 2019, so more than double. Now, vehicle sales revenues are practically the same as the total revenues because the majority of the revenues for NIO is from the vehicle sales. But if we have a look at their reasoning for this increase, so the increase in vehicle sales over the fourth quarter of 2019 was attributed to higher deliveries achieved from more product offerings to our users and the expansion of our sales network in 2020. The increase in vehicle sales over the third quarter of 2020 was mainly attributed to the sales of EC6s, which began deliveries in late September 2020. Now let's move on to the research and development. So in terms of R&D, for Q4 of 2020, we had an R&D expense of $127 million, which is a decrease of 20% compared to Q4 of 2019, which was 1 year ago, but an increase compared to Q3 of 2020 of about 40%. So they go on to explain why we saw this increase compared to last quarter, but a decrease compared to 1 year ago. So the decrease in research and development expenses compared to the Q4 of 2019 was caused by the decrease in R&D expenses related to EC6, which came to mass production in September 2020, and the company's overall cost-saving efforts and the improved operational efficiency in research and development functions. The increase in research and development expenses compared to the third quarter of 2020 was attributed to the incremental design and development costs for new products and technologies. Now let's talk a bit about the net loss. So for Q4 of 2020, we had a net loss of $212 million, which is a decrease of 51.5% from Q4 of 2019, but an increase in terms of net loss of 32.6% compared to Q3 of 2020. So they go on to explain why we saw an increase of net loss compared to the third quarter of 2020, and they attributed it to an unrealized foreign exchange loss derived from the depreciation of the US dollar balance, cash balance held by domestic entities with functional currency of RMB in the fourth quarter of 2020. And then finally, in terms of the balance sheets, we've got a strong cash balance of 6.5 billion US dollars as of December 31st, 2020. And the reason why I say that's strong is if you compare it to a company like Tesla, which has a market cap of about $700 billion, their cash and cash equivalents is about 20 billion. So 6.5 billion is very strong for a company like NIO. Okay, so now let's talk a bit about the future expected growth for Q1 of 2020. So the company expects that for Q1 of 2021, the deliveries of vehicles will be between 20,000 and 20,500, which represents an increase of about 421% to 434% from the same quarter of 2020. Total revenues are also expected to increase. So they expect a total revenue for Q1 of 2021 of $1.13 to $1.15 billion, which represents an increase of about 438 to 450% from the same quarter of 2020. So now let's talk a bit about the stock price. So we're near the end of the trading day for Tuesday, the 2nd of March, and we're about 13% down. We're at 43 US dollars. So why is that? The main reason is because we actually missed our analyst expectations by 7 cents. So that's the main reason. And when you've got a company like NIO, which is such a high growth company, a lot of people have a lot of expectations for a company like NIO. And so when you miss the expectations, even though you've had an amazing quarter and an amazing year, as we've just demonstrated by looking at the numbers, it doesn't matter. The main thing is the analyst estimates. So that's why I don't really like to trade too much around the earnings, because it's very unpredictable and volatile, and it really doesn't reflect the fundamentals of the company. The way I see it is the company is strong and it's shown very good growth, as we've just demonstrated with the earnings report. So if we have a look at the 6-month chart, you can see that for the past 4 months, we've managed to stay pretty much above the $40 mark. So I personally actually see that we might be coming to a level where it might be a good opportunity to buy some more shares. Because I already have a position, I think if it goes below $40, I may purchase some more shares. If I didn't have a position, what I would do would be to get a small position now and then dollar cost average and possibly buy the dips if there are any more. But that's basically how I would trade, or how I would buy the stock, because I usually buy and hold for the long term. But yeah, so that's how I see it. That's the end of the video. I'd be grateful if you can smash the like button and subscribe to the channel, and I'd love to hear your thoughts. Thank you so much for watching, and I will see you in the next one.